I invested $100 in crypto for 30 days. Here's what happened, in 8 paragraphs. 1. The decision to dive in with all the buzz around cryptocurrency, I decided to conduct a small experiment. I invested $100, an amount I could afford to lose, into various cryptocurrencies for 30 days. My goal wasn't to get rich overnight but to understand how volatile the market could be and whether short-term gains were even realistic for a beginner. I split my investment between popular coins like Bitcoin and Ethereum, and a few altcoins that were trending on social media and crypto forums. Point 2. Setting up the portfolio, I used a popular exchange platform to purchase my coins and track my portfolio. I allocated 40% to Bitcoin, 30% to Ethereum, and divided the remaining 30% among 3 smaller altcoins. I didn't day trade or constantly move my assets around. The plan was to buy and hold for the 30-day period. This was meant to simulate the experience of a casual investor dipping their toes in crypto. Point 3. The first week. A rollercoaster ride. The first week was both exciting and nerve-wracking. Within a few days, my portfolio went up by 8%, giving me false hope that I was on the fast track to doubling my investment. But just as quickly, a market correction wiped away those gains, bringing me down to 92% of my initial amount. It was a lesson in emotional control. Watching my investment swing wildly made it tempting to sell or reallocate. 4. The news effect. I noticed how much the crypto market reacts to global news. A tweet from a tech billionaire, a new government regulation, or a security breach could send prices soaring or crashing within hours. It became clear that crypto is not just driven by financial logic but also by hype, fear, and public sentiment. This added a layer of unpredictability that traditional stocks don't usually have. Point 5. Mid-month realization. By day 15, I was roughly back at my starting point. One altcoin had surged while another had lost nearly half its value. Bitcoin and Ethereum fluctuated but stayed relatively stable. I began to realize that while short-term investing in crypto can be thrilling, it's also incredibly uncertain. Timing the market is nearly impossible, especially without deep research and a bit of luck. Point 6. Research matters. I spent time learning about blockchain technology, use cases of different coins, and the teams behind them. The more I read, the more I understood that not all coins are equal. Some are built on solid foundations with real-world applications, while others are pure speculation. This made me rethink my initial strategy of picking coins based on trends and hype alone. Point 7. The final stretch. In the last week, the market rallied again. Ethereum rose sharply, helping me recover losses and even push my portfolio up to $112. It was a small gain, but it felt like a big win considering the emotional ride. However, one altcoin I held crashed overnight due to a rug pull scam, reminding me again of the risks lurking in the crypto world. Point 8. What I learned at the end of 30 days, my $100 turned into $107, not a huge profit, but a valuable learning experience. I realized that crypto isn't a guaranteed path to wealth, especially not in the short term. It's a high-risk, high-reward game that requires research, patience, and the ability to stomach losses. While I'm more cautious now, I'm also more informed, and that alone was worth the investment.